All right, folks, it has been a pretty rough go of things over the past week. If you are a bull in cryptocurrency right now, even equities, almost all sectors, at least major sectors, have not been doing too hot in the month of May here. We're looking at the previous 30 days of cryptocurrency prices. You can see Bitcoin has dropped about 26.5%, Ethereum just shy of 30%. Solana over 40% drop. You can see some even, Phantom has dropped over 55%, Decentraland 51. A lot of major drops in terms of Ucash's rise. It's a little tricky to figure out exactly why this has happened. I have not done nearly enough research to have any sort of opinion or understanding as to why. I'm sure it's gotten some coverage here, but for the purpose of this video, I will stick to the major market stories. And obviously, the big trend has been price drops. As to why, we will get into a few theories, what our metrics are showing. Before I do that, just keep in mind that everything we do here on Santiment recordings should be taken as data, metrics, reports with proper context being provided by me and other people who record videos. We do not do investment advice. There are plenty of platforms that do offer those services, but we aren't one. We don't tell you whether to buy or sell, but we will say historically whether there are bullish or bearish divergences based on historical thresholds being crossed that typically lead to bounces or price drops. And on this video, we will be looking at some of the major metrics that are pointing to potential price bounces, because obviously the trend has been a whole lot of down over the last 30 days. We can even look at the last 7 days and see that the majority of the drop has happened just in this past week here, with Bitcoin down about 19%, as has Ethereum. Around that same percentage. Luna has been the big loser over the past week at 44% among these top 100 market cap assets. But yeah, obviously the FOMC meetings happened on the 2nd and 3rd, I believe. It might have been 3rd and 4th. I think it was the 2nd and 3rd. But yeah, after those meetings occurred, we had this big price spike. You can see that Bitcoin is here in green. The S&P 500 is in blue. And obviously the flat times are the times that the S&P markets are closed. But crypto, of course, isn't, which is why we're continuing to see up and down volatility that never stops. Regardless, this May 4th spike for both Bitcoin and the S&P was very encouraging. This occurred right after the FOMC confirmed that they are raising interest rates in the US of half a percentage point after doing the same back in March. They did so right around the 10th or 11th here, and notice how right after the prices exploded. They went up. So this was a case of selling the rumor where everyone was fearful of the FOMC raising rates. They finally did so after basically the US having no interest rates for the last year and a half. Finally added interest rates back in while everyone was fearful, and then the price soared. Then going into April here, people started talking about the next FOMC meeting, and the big drop once again occurred, this time with the rumor being the Fed would raise rates by half a percentage point instead of just a quarter. And prices were plummeting. Plenty of other reasons that prices can plummet besides just fear of this, but it is one of the major stories, and inflation has been on people's minds a lot with the amount that's been going on, at least here in the US. So prices dropped, and they actually, as of about an hour ago from the time of this recording, went below 30K for the first time in just about a year. It was right around mid-May of last year when it dipped below 30K. So call that a coincidence if you will. It probably is, but there could be other reasons, and whales do control markets. But that said, we dropped below 30K for the first time in about a year. And now the question is, will this correlation break, right? We got through the two big FOMC meetings where everyone was fearful of interest rates going up, and it was confirmed that the fears were justified. But the question is, are prices baked in when that happens? And now we're about a little under a week removed from the Fed's decision, and we're going to see how things change. Last time it was only like a day or two before things really turned around. This time, a lot of people said, okay, history's going to repeat itself. Uh, Everyone's selling the rumor. Is it time to buy the news? But really, this was only a 1 day thing, and then prices plummeted. So we're going to have to see how it goes. Now, looking at some of the metrics here, there's a lot we can cover. Beginning with MVRV, right? So MVRV is the average trading returns of 30-day in this case, but you can do other intervals. 30-day trades for anyone who has invested or added to their portfolio in the last 30 days. Right now, we are in a historic opportunity zone where it's below this negative 15% line that we often look toward as an extreme pain point for trading returns for average traders, as a good time to buy in, at least at a much smaller risk than usual. And the last time we got below this point was way back in late January when a price bottom formed. That's when we got below 35K and basically through a lot of volatility, pushed our way back to about 48K before retracing, right? So we want to look for these points as extreme pain points for the markets, and we are there right now. We saw this back here. This was more short-lived. Yes, prices went further down, but MVRV was still in negative territory here, so below this 0% line, which still said there was plenty of meat on the bone for a big price rise to eventually happen, which of course it did, and we even made our way all the way up to an all-time high in early to mid-November. So MVRV, all things considered, is looking pretty solid right now, sitting at about negative 18.5%. And that's the average trading returns of those who entered into Bitcoin positions in the last 30 days. Looking at sentiment, it is very negative here, as you would expect. Not quite historically so, but very much this week is looking to be a lot of FUD, which is certainly something we prefer to see. Notice how when we were really negative in most of late February all the way to early April, prices were able to go up through all of this. Yes, there was a huge correction while traders were still negative, but once things turned positive and everyone said, okay, history is going to repeat itself, it didn't, right? Because everyone expected that and it didn't come true. Everyone thought this bounce back here in early to mid-February was just the beginning toward us going back toward the all-time high. They were wrong, right? And this is often the case. We'll see that with funding rates too in a moment. I'll show how that's looking. But overall, you want to see funding sentiment looking negative. And as of now, prices are bouncing slightly off of just below 30K, and they're back close to like 30.5 or so. Let's see what kind of reaction people have, whether they completely doubt this or whether they think that this is now the dip to buy and they become euphoric again right away. We'll have to see how that goes and how quickly prices do recover if they do. Last point on Bitcoin, take a look at the exchange flow balance. See this spike? This shows that the net difference between all the inflows and outflows going on and off of exchanges, there were about 40.1K Bitcoin moving onto exchanges versus off in terms of the difference between on and off. This is the largest spike, the largest net balance spike in 29 months today. That is crazy to see. If I go back to 2019 to 2020, so this spike here is the last time that it was above where it was today. This indicates there's a lot of polarization in the markets. Usually if there's funds moving onto exchanges, it's for the purpose of selling, but that doesn't necessarily mean it's being done by the whales. It does mean that it's either for selling or for trading into altcoins. You never know, but in a vacuum, it means that people are intending to sell. And you can look at that two ways. It could mean that prices could go further down, especially if it's people who have very large balances planning to sell to smaller traders. That wouldn't be good. But it also could be a collective amount of smaller traders who are capitulating and basically showing their weak hands and getting out of the markets, which would be a good thing. Overall, though, this is a slightly negative sign. We don't want to see this. We prefer to see these outflow spikes, which typically foreshadow bounces occurring. Not always, but it is, when you talk about a 29-month occurrence, that's a big deal and something we should be keeping a close eye on. All right, I also want to look at whale transactions. We see Ethereum here, but before we look at Ethereum, let me backtrack. I was looking at stable coins, and check out this spike by USDC, which is around the fourth largest stablecoin in crypto right now, I believe. We had 5,392 transactions of USDC that were valued at $100,000 or more. That is a big deal, and it means that a lot of coins are being moved for the purpose of what I presume to be for buying, right? So this could kind of be a good sign, especially if whales are pumping these up, which is usually the case when you look at transactions that are $100,000 or more. This is a good sign that whales are preparing for something. And the last time we saw spikes like this big bunch of whale transactions occurring, which by the way weren't even this big, that was the price bottom back in mid to late January. So that's a very good sign. Even this smaller bunch of spikes here, that was another price bottom here in late February. This was right after the Ukraine-Russia conflict, or war, I should say, was announced. So that's USDC. While we're on the subject of stable coins, we can also look at Tether, and we see a similar spike. It's not something that is the largest in the past year, but it's certainly one of the top ones. It looks like around a top 5 spike in the past year, with 2,847 whale transactions occurring just in this 4-hour interval. It looks like about 6 to 8 hours ago from now. So that can be an interesting sign. Again, same as USDC, these tend to precede bottoms, so it's a good sign historically if you're playing the odds. Now let's look at both Bitcoin and Ethereum to see if there's any interesting whale transactions going on. And yes, there definitely is. We see that this is a pretty large spike, 3,590 whale transactions valued at $100,000 or more. This is the largest 4-hour interval of that happening since late January. So just like the stable coins, we're looking at about a 3.5 month high in terms of the amount of whale transactions occurring on its network right now. Ethereum actually is seeing a larger spike right now. This is the fourth largest, spike in the past year. So there were 3,738 whale transactions occurring. And typically these happen around bottoms as well for the markets. So that's 4 good signs. All 4 key assets are showing a significant amount of whale activity right now. And now we can take a look at some of our Sandsheets models. Anyone with Sandbase Pro can check these out anytime. We'll leave links for how to do so in this video. But this model is basically blending together the 1, 7, 30, 90, 180, and 365-day MVRVs and showing how much of an opportunity zone we are in. It is going to do a refresh here for a couple minutes, but before it did, you could clearly see that almost all of them are past that opportunity zone dashed line, indicating it's a top 5% time in terms of trader pain across multiple time frames right now. And when trader pain is maximizing, like it is right now, that historically is the time when prices start to bottom out. It may not be a huge price bottom that indicates that prices are going to go up for the next year or two, but it could at least mean that for the next few days, weeks, or a month or two, there's going to be some relief bounce of some kind to allow cryptocurrency traders in a zero-sum game to get back to zero instead of where they are now, where for 30-day traders, it still needs a little more time, but most 30-day MVRVs, here we go, are far below negative 20%. We saw that Bitcoin was in the teens, but many are like negative 28. There's plenty above below negative 30. This is only showing about 30 assets too. So like 30-day MVRVs, there are probably some smaller cap assets that are under negative 50% showing gigantic opportunities there. Now, it's worth reminding that the trend downward could very well continue a little bit longer. MVRVs don't necessarily go past this dashed line and then completely stop and suddenly the prices bounce. As I'm illustrated, I mean, the graph 1.91 above standard deviation, that means it went almost twice as far as this 100% opportunity line. And just because we're at close to historically most painful times for traders doesn't mean it is a certainty that prices will bounce. But given probabilities, there is a much lesser risk in getting into positions or adding on to positions right now. So that's something to keep in mind for all of the Santiment community. Funding rates is another important thing to take a look at. This blue line here is the average funding rate for Bitcoin amongst multiple exchanges. Typically, when the average funding rate is up high, it's in this red zone, meaning there's a little bit of euphoria or greed happening, and prices tend to correct. When we go below this line and we're in the green territory, prices tend to bounce and go up. And we saw there was a really extreme drop here, which probably was a result of the 48-hour low that just happened right here. And it's interesting, as it just refreshed here, we see that the latest funding rate has gone way back into long. So people might be a little too optimistic of a short-term bounce right now. And we'd need to see funding rates stay in the green negative territory a little more consistently so that people, it's funny, it's adjusting right now, so bear with me. But like this was essentially the line that it just showed. And clearly there's a ton of polarization where traders are going from severely short to mildly long, at least right now. And right now, we see that Bitcoin is around neutral, but look at altcoins. Super, super negative, a lot of shorting happening. And you can actually go to this other tab. If you have Sandbase Pro, you have access to this model. We'll leave a link. And you can see which ones are seeing the most shorting. Luna has been really dropping off a cliff. So a ton of people are shorting it as a result and expecting it to go further down, placing their bets that way. Same with XEM, same with Sia Coin and Small Love Potion. Axie Infinity seems to be perpetually in short territory. The only one that's in long territory right now would be Dent, which is interesting. I'd love to find out why. But yeah, this can be extremely valuable to understand trends and seeing what's going on. And right now, it looks like altcoins are being severely doubted and expecting to go further down by the trading masses. So that's something to keep a very close eye on. We talked about whale transactions, but this is another Sandsheets model that quickly shows you which ones are just seeing historical spikes in their whale transactions over the past 3 months. So this is basically how close we are to 3-month highs, with Ethereum right now being very close. It's doing some refreshing, which it loves to do when I record these videos. But you can see that there are a lot that are like right around 100%. USD coin, as would make sense, is at its 3-month high. Wrapped Bitcoin, same thing. Tether is right around its 3-month high. Nexo, we can see that Bitcoin is up a little bit. It's definitely seeing a huge whale transaction right now, actually. Green bars mean that it's in the last 4 hours. Yellow bars mean that there's not enough data yet, so it's using the 4-hour to 8-hour ago bar. So that's how I set it up. And then these small black lines, this is just showing like an average of the last 48 hours or 2 days. um, to see how that is measuring up versus its historical average, which would be at 50%, right? So anything above 50% means that the last 2 days have seen a significant amount of whale transactions compared to normal. Ethereum is right up here near the top of these 60 or so assets that we're showing. Same with USD coin, wrapped Bitcoin. Another one would be like FTX token. So this can be a really valuable model to really try to time bottoms and see when whales are starting to plan to turn things around. And then finally, the NVT chart. Make it just a tiny bit bigger. We'll go right there. So Bitcoin right now is showing extreme bullishness on our NVT model in terms of its divergence between the amount of unique tokens or token circulation moving on its network versus price. And the last time we've seen a solid grain, fully bullish bar was way back in December 2017, just as we were ending our bull run at that time. Keep in mind, this is a small sample size. This is only the first 9 days of the month. But if this continues for the next 3 weeks, this would be a pretty big milestone where we're looking at about a little under 4.5 years since the last time we saw this much of a bullish divergence in the amount of utility among a large supply of Bitcoin's overall coin supply. So very interesting there. We'll also take a quick glimpse at Ethereum and see that after 3 months of red, which this model correctly predicted, we were a little over leveraged and not getting enough circulation to justify these high prices. Because it slid so far, the circulation has stayed around the same, but prices have dropped all the way to the 2200s, meaning that the model now sees it as a semi-bullish divergence. So that is something to keep in mind as well. Not investment advice at all. Just understand that this model is using math and has a lot of historical evidence on its side to predict where prices go next. You can see this long stretch of red is when prices were actually correcting, and as soon as it started to go bullish here, its first solid green bar, that was pretty much the price bottom from the last 3 to 4 years or so. So it's got some validity to it. And when you see it in semi-bearish or bearish territory, expect a lot of volatility at minimum and a pretty solid slide downward at maximum. So thought this would be a good time to update considering the amount of trader pain going on. I know many of us had significant losses over the past few months here, especially going back to 6 months ago. This is just about the 6-month anniversary of the all-time highs of Bitcoin and Ethereum in the second week of November. So the last 6 months has not been great for crypto, but keep in mind that when there is blood in the streets, there is eventually some relief bounce. It may not happen right after this video is recorded, but this is a more opportune time or likely time for it to happen than we've seen in a while. So if you believe in probability and want to take the risks, there are buys that are mathematically justified right now. And I'll leave it at that. Hope you're all staying safe and warm, and I'll talk to you soon.